But if BTC reverses by 1%, the position closes, protecting the profit. What that means is, if Bitcoin decides to come down after its initial progress, the stop loss or the trailing stop is not going to go down. It's just going to stay where it is. And if you are in profit, it's just going to take you out automatically and secure your profit for you. So this can be very helpful for people who might not really have time to monitor your trades. Maybe you are a busy person, you are a family person, and you don't really have time to monitor and always check on it every hour. Setting the trailing stop can be very good, because in case of any unforeseen manipulation or market high volatility, it's there for you. It's following the price. If it happens, it takes you out and secures your money for you. So it's an automated system. Now, how to use it with an UV signals? Now, when entering the confirm change in direction signal, set the trailing stop of 0.5% to 1% as you enter the trade. Don't worry, after this lesson, this particular topic, we're going to go to the charts and I'm going to show you how to set a stop loss and how it's going to trail when price moves in your direction. So set a trailing stop of 0.5% to 1% as you enter the trade. This gives you the trade breathing room while automatically managing your risk. You can see. So once price moves 0.8 to 1% in profit, cancel the trailing stop and set stop loss at break even. So this is just a protocol that we recommended for users. I think it will be very, very, very good when managing your risk. So when price moves in your direction to a certain percentage, it is better to cancel your trading stop and then set your stop loss at break even. So your stop loss is going to be fixed at break even. So you can allow that trade to run for as much as, for as long as possible. And then when you decide to exit your position, that's at your discretion. So exit your position at your predetermined take profit level, like I've said. This ensures discipline and consistent results. So pro tip, the trailing stop helps you enter safely. The break even stop keeps you safe. The take profit finishes the job, like I've said. So I'll take it again. The trailing stop helps you enter safely. Yeah. So for example, now you enter the trade and you are unaware that manipulation might be happening. But since you have set a trailing stop, you are rest assured that I'm secured. So even if the price goes in your favor and then comes back down to your entry, the trailing stop will take you out, which means you are no longer interested in that trade because this trade has been ruined by manipulation. So it's better to just stay out, wait for another signal from the bot and then re-enter. So the break-even stop keeps you safe. It keeps you safe in the sense that when your trade is moving in your direction and you are making money, your stop loss stays there so that no matter what happens, your account balance is no longer at risk again. It's at break even. So even if it comes down to your stop loss, it's going to take you out with no loss at all to your account balance. So I want to use this opportunity to introduce the 4 different kinds of trades we have in trading. So the first trade is called winning trade. We have a good trade, number 1. A good trade. Number 2 is a bad trade. Number 3 is a winning trade. And number 4 is a losing trade. So what is a good trade? A good trade is a trade where you don't lose money. So you enter the market, you place your entry, the price moves, you follow all the protocols, you set your trailing stop, the price moves, you deactivate your trailing stop, your stop loss is at break even, and then maybe all of a sudden manipulation happens and it takes you out. As long as you didn't lose money, that is a very good trade. So a good trade is a trade where you don't lose money. I believe that's self-explanatory. So the second one is a losing trade, or rather a bad trade. Now, a bad trade is a trade where you lose money. That's a trade that hits your stop loss. That's, oh no, the trade didn't work out. So my account balance went down by so and so percent. That's a bad trade. So now, a winning trade. A winning trade is a trade that stays in the positive side for a long period of time. Now, what does this mean? You enter a trade and you are getting $10 profit, $20 profit, $50 profit, $100 profit, and it stays there for long, for like hours or even days. You are seeing your $100 profit, your $200 profit for days. That is a winning trade. These are the kind of trades that we encourage traders to hold on to for as long as possible. And then when you feel that you've gained a lot of money, you can now close out and take your profit. So basically, that's just what a winning trade is. A trade that stays in the profit side for a longer period of time. And then the last trade is known as a losing trade. Now, what is a losing trade? A losing trade is a trade that stays in the negative side for a longer period of time. Now, the trade has not hit your stop loss yet. Okay, it's just dancing in between your entry and your stop loss. It can stay there for like hours and days and it doesn't hit your stop loss. Please, if you are experiencing something like that in trading, I will advise you just go and end the trade, because there's really no point holding on to a loser. In trading, we don't hold on to losing trades. No, it's not advisable, because if you hold on to a losing trade, it's going to mess with your psychology, and you can do something stupid and say you want to increase the size of your stop loss, which is very, very, very wrong. In trading, if you have your stop loss at $5, if the trade is not working out, let's just say you are seeing -3, -4, and it's staying there for a very long period of time, it's not making any progress, please just go and end the trade. There's really no point holding on to it. Don't be tempted to say, okay, no, I still believe that this trade will move into positive. No, don't do that. And then you make the mistake of reducing, or rather increasing your stop loss from $5 to $10. No. What you've done is you've just added more risk to your account. And that is not a go-to move in trading, because in trading, you are a risk manager. You are meant to take little risk as possible. So if you are going to increase the size of your stop loss or your trailing stop, what it simply means is that you are now accepting more risk to your account balance. And that is not it's not going to be very good for you on the long run, because you're going to end up having bigger losses. So, like I said, discipline, consistency. If you are disciplined, leave your stop loss at $5. If it takes you out, fine, no problem. Your account goes down to 95. And then you start again. And continue with your system, continue with your strategy, stay consistent. So I think this is the okay. Before we do that, let's go to the chart so I can show you how to set stop loss. So we can, let me show you how to set a stop loss and how the stop loss is going to trail. Okay, so this is the chart. Let me just move my camera. Okay, so I don't think I will be able to access my trading panel for now. So, but what will happen is I will post a video about this. After this video ends, I will post another video when I can access my trading panel, and then show you how to set a stop loss and how to set your take profit and how the stop loss is going to trail. So let's just go and round up with the third topic for today. And the third topic for today is going to be the unique candlestick pattern that you will notice or you are looking out for. Whenever you see a change in direction, a confirmed change in direction, or a strong confirmed change in direction, there is a unique candlestick pattern you are going to look out for that tells you when the price is moving in a certain direction, whether it's going up, whether it is coming down. And this candlestick pattern is called the 3 white soldiers. So 3 white soldiers. So let's just see. Okay, so if you look at what is being displayed now, camera down. Okay. So as you can see, confirm change in, okay, that's direction. That's just an error. So this is when the price is coming down. This is 3 black crows. Now, the board signals a bearish market structure shift. 3 strong red candles confirm seller control. Now, what this means is when you see a candlestick pattern like this and there are 3 red candles that follow each other, you can see 3 red candles following each other. That's a very strong indication that big players and banks are pushing the price down with force. And in this market, only banks and big players and institutions have the power to push a price in a certain direction. Individual traders like us don't have that power. That was why I said the banks and the corporate institutions, they are the ones that control this market. So we don't have the power to push price in a certain direction. We don't have the power. But the banks and the major corporate bodies, they are the ones that have the power to push price because they are investing with billions and billions of dollars. So when you see a candlestick pattern like this, let me just highlight it so that you can see. When you see a candlestick pattern like this, that's a pointer that something is happening in the market and you need to be aware. So, but first of all, the bot is going to send you a notification that, okay, I think you need to go and check the chart. Something is happening. And when you come, if you see something in this pattern, you can start getting ready to enter your trade because something is happening. The price is moving. So this is this for bearish, which is the price is coming down. Let's see for bullish, which means the price is going up. So confirm change in direction, 3 white soldiers. Now this is how the candlestick pattern looks like. Let me just highlight it. That's it. That's how it looks like. So as you can see. Okay. Alright, so let's look at it in detail now. Now, what it means, when the bot sends a confirm change direction signal, it means that market structure has shifted. Price wants to move the other way, like I've said. If you also see 3 white soldiers stroke, 3 black arrows, 3 strong candles in a row, please, very, very important, in a row, it confirms that buyers and sellers or sellers are taking control, which means the big players are spending billions into that particular coin. That's why the price is moving in that direction. So why is it's powerful? CID, which is confirm change direction, shows the start of a reversal. So if previously the price was coming down and then the bot sends you a signal, maybe after a liquidity sweep, a strong confirm change direction, and you begin to see a candlestick pattern like this, you begin to see it. Remember I said the price is coming down, and then you see something like this forming. That's an indication that, okay, it's like these people have started moving the price up. So the bot is going to signal you early, and you have to be the one to go and check and say, okay, I think this candlestick pattern is forming. Let me start entering my trade now so I can follow them in their trade. So that's just what it means basically. So 3 white soldiers and 3 black arrows always confirm momentum and strength. I think that one is self-explanatory. So together they give a high probability entry. So a change in direction signal plus identifying that candlestick pattern will give you a high probability entry, meaning price will likely keep moving in that direction. That's straightforward. So now how to trade it? The first step is wait for a bullish or bearish confirmed change in direction. The bot will send it to you, whether it is confirmed or strong confirmed change direction. And like we've said strong confirmed change direction is our primary signal. And a strong confirmed signal is the trend is going to last longer than a confirmed change in direction. I want to try and clarify this because a lot of people might think that confirmed does not really work. Confirmed works, okay? A confirmed change direction works. It's just that the confirmed change direction might not last as long as a strong confirmed one, because a strong confirmed one is indicating the presence of a liquidity sweep, which is manipulation. And like we said, whenever the big players want to push price in a certain direction with speed, there is always manipulation that happens. Very key note. Manipulation will always happen when you want to take the price in a very, 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 a fast pace for a long period of time. And usually, strong confirmed change direction, it usually lasts for many, many hours, sometimes even days. The trend can keep going up it can keep moving for days, whether it is going up, whether it is coming down. So I want to just clarify the differences between the two. Now, it says wait for a bullish or bearish change in direction signal from the bot. The second one is check the chart, look for 3 strong candles after. That's the 3 white soldiers and the 3 black arrows. In that same pattern, whether it is going up, whether it's coming down, you have to check because that pattern indicates movement. So that's second step. Third step is make sure price has moved at least 1%, which means it shows momentum. So enter after the third candle closes or on a small pullback. So after you have confirmed 3 candles that is present in that move, you can enter after the third candle has finished and the fourth candle opens. That's what it's trying to say. Enter when the third candle closes. Or you can decide to wait for price to pull back a bit and then you make your entry. But either way, you have to make sure that those 3 candles are present. Very, very important. And then set stop loss below the first candle. So this is the first candle. So if you are going to enter at this, after this candle closes, you can enter your entry and then place your stop loss just below the first candle. But we're going to go to the chart and I'm going to identify the candlestick pattern for you on the chart so you can see and then how to enter. So set stop loss below the first candle and aim for 1.5, let's just say profits percent, 1.5% profit to 4% profit. So which means you are aiming for a 1.5% move to a 4% move. So key points. Change in direction tells you where the market is turning. 3 white soldiers stroke 3 black arrows shows who is in control. Like I've said, if it is going up, it's bullish. If it's coming down, it's bearish. When both align, institutions are likely moving price, and that's your best time to join. I think that is straightforward. So I believe we've come to the end of the second topic for today. And let's see if we can go to the, let's go to the final topic for today. Okay, this is the final topic for today. But we are going to be rounding up this video very soon. But before we round up, I want to look at the chart. So you can look at what the 3 white soldiers look like. Or rather, let me give you some screenshots first. I'll give you some screenshots so that, okay, let's look at this first one. Okay, so if you look at this first one now, let me put my camera down here. Okay, so this signal came out 26th of October 2020, Sunday 26th of October. Okay, so so as you can see now, if you look at this area here, you are going to notice a candlestick pattern. If you look very closely, after the red candle, you will see one green candle, the second green candle, and then that very long green candle. You can see that they followed each other. That is characteristics of movement. That's characteristics. So if you want to enter this trade now, you can wait for the third, that very long one, wait for that one to close, and then enter your trade. So this is just what it looks like on this screenshot. Let me go to another screenshot so I can show you. Okay, so this one now, let's see if you can identify it here. Okay, this is it right here. Can you see that? So that is 3 white soldiers. Look at the first candle, second candle, and the third candle. That's 3. That indicates a strong move, and only the big players and the banks can make the candlesticks look like this, because they are the ones investing with the most amount of money. So whenever you see, you can see where the signal came out. Oh, sorry. You can see where the signal came out. It came out 28th of October 2025, and it came out around 4 a.m. 4 a.m. in Nigerian time is 5 a.m. So, but since when it came out, we didn't spot, if you look at this area right here, we didn't spot that candlestick pattern around this area when it came out. So we had to wait. We had to wait until this time. We had to wait until this time before we could enter our trade. Okay, let's see if we can look at another one. Okay, let's look at this one. It says confirm change in direction on Trump, now bullish, and it says 1:02 a.m. So 1:02 a.m. will be, on TradingView, will be 12:02. Let's locate 12:02, and you can see 000. So just a 2 minutes, difference. So now this is where the signal came out from, and let's see if we can spot that candlestick pattern. Can you spot it? This is it right here. This is it right here. That's it. That's the 3 white soldiers. If you look at it, first candle, second candle, third candle. That's the 3 white soldiers. So when you see this candlestick pattern, that's an indication that the price is moving with very, very high momentum, and it's moving at a very, very, very fast pace. So you want to start planning your entry at that point in time. All right, so let's go. I think we've come to the end of this video. I wanted to actually show us how to place a trade, but since I can't access my trading panel for now, I might have to do a video maybe later on in the evening, just specifically for the trailing stop and the stop loss. So thank you so much for watching, and as usual, read the manuals, watch the videos over and over again to have a better understanding. So thank you so much for watching. Thank you for joining us in today's training session, and from here we are saying signing out, and we'll see you in the next one. Bye for now.